Welcome to The Mortgage Brief, a podcast filled with mortgage loan information at your fingertips. This show is for the first-time homebuyer, the move-up buyer, and the current homeowner looking for residential lending tips and tricks about the home buying or refinancing process. I'm your host, Jason Ammon from Guild Mortgage. I'm a licensed residential mortgage loan officer with 20-plus years experience, and on today's show, we're talking about who pays closing costs when you buy a home. So stay tuned. We'll be right back. So who pays for the closing costs when you buy a home? Closing costs are expenses related to obtaining a mortgage and closing a home purchase or refinance. They're separate from the sale price of the property. Are you buying or selling a home and wondering who pays closing costs? Both buyers and sellers are expected to pay their share. If you're a borrower, how much you pay depends on the mortgage type and where you live. So what are some examples of borrower closing costs? Typically, a buyer should expect to pay all home loan related fees ranging from 2% to 5% of a home's value. U.S. homebuyers of single-family homes spend $6,837 on average for closing costs, including taxes. So there are no big surprises on closing day. Lenders will provide a loan estimate with an estimated closing costs after the borrower submits a loan application. While the actual expenses aren't the same for all home purchases, here are some standard examples of the property, loan, and third-party fees that most buyers will pay. The appraisal fee. Lenders typically require a professional appraisal on the property during a purchase or a refinance transaction. This helps to determine fair market value and the amount of the loan to value. For homebuyers, this also helps to ensure they aren't paying too much. Depending on the property type and location, the cost of the home appraisal will vary. Home insurance. Buyers may be required to pay the annual homeowner's insurance premium plus 2 or 3 months payments in advance to set up an escrow account. The average cost of the homeowner's insurance is $1,249 per year or $104.08 per month. Loan origination fees. The lender charges loan origination fees to cover the cost of processing your loan application as well as underwriting and funding the loan. Private mortgage insurance. If you buy a home with less than 20% down, some lenders will require the first month's PMI at closing. Property tax. When home ownership transfers to the buyer, so does the responsibility for paying the property taxes. If the seller prepaid the entire year of the property taxes, the buyer generally pays a prorated portion of the taxes for the remainder of the year. In general, the amount of property tax can be estimated by multiplying the property tax rate by the property's current market value. Recording fees. A county fee for legally recording the deed of trust and other documents related to the mortgage. According to the Home Buying Institute, the national average for the recording fee is $125. Settlement agent fees. This is for covering the office handling and the exchange of money and documents, usually by a title company or an attorney. Other loan-related one-time fees. There are certain credit reporting and title fees that may be included in the borrower closing cost. Optional discount points. Points are optional prepaid interest charges on a loan in exchange for a lower interest rate. Each point is equal to 1% of the total loan amount. Borrowers who choose to pay discount points can lower their monthly mortgage payment. Is there a difference between buyers and sellers' closing costs? While buyers pay fees related to obtaining a mortgage and closing on a home purchase, sellers pay real estate commissions and fees associated with the transfer of their property. Here's an overview of the typical closing costs for sellers. The real estate commission. The real estate commissions for both buyers and sellers agents are the biggest fees sellers should expect. This expense typically averages between 5.5% to 6% of the sales price. Transfer tax. This tax is paid when the title for the home transfers from a seller to a buyer. It varies by location. Homeowner association transfer fee. For homes with homeowners associations, sellers may have to pay a fee to transfer the ownership records to the buyer. Closing costs vary by state. Closing costs and who pays them vary widely by state or county. To be better prepared for closing costs, borrowers should connect with a local loan officer like myself early in the home buying process to budget accordingly. Sellers should contact a real estate agent. On a side note, New Hampshire splits real estate transfer taxes. Homebuyers in most states should expect to pay real estate transfer taxes and their closing costs. Transfer taxes may also be known as real property transfer, realty transfer, recordation, documentary, conveyance, or deed transfer tax. In New Hampshire, the buyer and seller are supposed to split the tax. On my blog, you can find the average closing cost by state, where a company called Closing Corp has provided the most recent closing data and has ranked the highest average total closing costs with taxes. We won't cover the entire chart here, but if we skip down to New Hampshire, for example, New Hampshire is ranked 10th on the chart, behind Washington, D.C., Delaware, New York, Washington, Maryland, Pennsylvania, Connecticut, Florida, and California. The average home sale price in New Hampshire, as of the date of this recording, is $332,880. The average total closing cost with taxes in New Hampshire on that is $8,162. The average total closing cost without taxes in New Hampshire is $2,795. And the percentage of the sales price with taxes in New Hampshire is 2.45%. Closing costs can vary based off of the specific loan type. Government-backed mortgages like VA loans require a VA funding fee. This fee is typically rolled into the borrower's loan balance. In addition, both conventional and government-secured loans limit the amount the seller can pay towards the buyer's closing costs. These seller concession limits may be related to the down payment or based off of a percentage of the home appraised value. Typically, the seller can provide a credit between 3% and 6% of the purchase price, but it depends on the type of loan. The conventional loan, the down payment of 10% or less, the seller can cover up to 3% of the purchase price towards seller concessions. On a down payment between 10 and 25%, the seller can cover up to 6%. On a down payment of 25% or more, the seller can contribute 9% seller concession towards closing costs. On investment properties, the concessions are limited to a maximum of 2% regardless of the down payment. FHA loans. Regardless of the amount of the down payment, the FHA requires mortgage insurance totaling 1.75% of the FHA loan due at closing. The seller can contribute up to 6% of the appraised value or purchase price, whichever is less, towards closing costs. VA loans. Funding fees for VA loans are paid to the Department of Veteran Affairs. They range from 0.5% to 3.6% of the loan amount, depending upon the number of times the veteran has used their entitlement and down payment. A disabled veteran also has no VA funding fee. Seller concessions on VA loans cannot exceed 4% of the property's appraised value. However, the VA doesn't consider standard loan closing costs or payment of points as seller concessions. Instead, the VA defines seller concessions as anything of value added to the transaction by the builder or seller for which the buyer pays nothing additional and which the seller is not customarily expected or required to pay or provide. Examples of seller concessions include payment of the buyer's VA funding fee, prepayment of the buyer's property tax and insurance, and payment of extra points to provide permanent interest rate buydowns. USDA loans. Funding fees for USDA loans, or RD, rural development, one and the same, typically equal 1% of the loan amount and are typically financed into the loan amount. Seller contributions are limited to 6% of the sales price. The seller's contribution limitation does not include closing costs or prepaid items paid by the lender through the premium pricing. Seller contributions cannot be used to pay for an application's personal debt. So what determines who pays closing costs? The purchase contract and regional government regulations will determine who pays the closing costs on the home. You can always negotiate who pays. For example, the fixer-upper buyer might negotiate with a seller to pay a percentage of the closing costs instead of making the repairs. In the negotiation process, the seller may ask for concessions in return. And finally, check out the Guild Mortgage Cash to Close calculator on my website. If it's your first time buying a home, you may need some help calculating a closing cost estimate. Closing costs will typically be in the range of 2 to 5% of the home value. When you are purchasing, that range can mean a difference of thousands of dollars. An estimate up front will give you more time to have the proper funds available. With the Guild Cash to Close calculator on my website, you tell us about the home you're interested in purchasing. Then we'll let you know approximately how much money you will need to close. Thanks for tuning in to today's show. If you would like more information about this topic or any topic related to the buying or refinancing of a 1 to 4 unit residential property, please reach out to me or my team by visiting my website, www.guildmortgage.com/Jason Ammon. That's JASONAMMANN. You can also find us on Instagram under the handle @JasonAmmonGuildMortgage and on YouTube under the same handle. Thanks for tuning in, and we'll see you next time right here on The Mortgage Brief. Guild Mortgage Company, Equal Housing Opportunity, NMLS number 3274, Jason Ammon, NMLS number 126651. I'm licensed to do business in the state of New Hampshire. The information provided today is for educational purposes only. Position strategies or opinions of the show do not necessarily represent the position strategies or opinions of Guild Mortgage Company or its affiliates. Each loan is subject to underwriter final approval. All information, loan programs, interest rates, terms, and conditions are subject to change without notice. Always consult an accountant or tax advisor for full eligibility requirements on tax deductions.